Welcome back to Small Caps, ladies and gentlemen. And on very high demand, I've managed to get Gareth Soloway back on the channel. For those of you that don't know, that you've been sleeping under a rock, he's the president, CFO, and chief market strategist of inthemoneystocks.com. Now, I spoke to Gareth 2 months ago. We were talking about confusion in the market. We were talking about Fed pivot. We were talking about what we can do in these crazy markets that we find ourselves in. And I guess it's just got a little bit crazier. So I'd like to talk to you, Gareth. Welcome back to Small Caps.
What a market. Thank you. Yes, what a market. I mean, there's no quiet in this market these days, whether it's the Fed or the dollar or FTX or, I mean, there's just anything. You turn any direction and there's something new bubbling up. So it keeps us on our toes. But like I always say, volatility creates opportunity. So again, whether we're in a bear market or a bull market, there's always opportunity. You just have to look for it.
Oh, thanks for making me feel a little bit better. And I hope all of you out there feel a little bit better on that, because I guess Gareth's right. There is always opportunity, but we have to be prepared, and you have to listen to people like Gareth, who has called it. I'm pretty sure you've called it right most of the time, but recently we had the collapse of FTX. And I did say the other day, Gareth, you couldn't make the name up, could you? Sam Bankman-Fried. He's fried.
Yeah.
I just went, is that a made-up name? Anyway, you said that the FTX collapse is like a Lehman Brothers moment. Now, that was back in 2008. Can you explain what you mean by that?
Yeah, so there's a lot of similarities with it. I mean, you talk about the earth-shattering kind of event that Lehman Brothers was in terms of shaking the industry to its core. And I think you've seen that in crypto. I mean, this is really the big earthquake if you're looking for one. And then what you're looking at also is how does the crypto market come out of this? And one of the interesting things when you look at how an exchange in crypto is virtually the same as a bank is in the economy, right? So, the banks obviously lend, they give you leverage, they give you all these kind of things to do. Well, that's what the exchanges do essentially. So there's a lot of similarities in what they are and ultimately how they failed, right? Lehman Brothers took risks that they shouldn't have taken. They leveraged themselves up way too much. FTX did the same thing. So there's a lot of those similarities. And then you look at things like the charts and you start to say, okay, did the market bottom when Lehman Brothers collapsed? And the answer is no. It took about 5 to 6 months to bottom. So you start saying, okay, if this is a Lehman Brothers moment, when does this give us? Does this finally give us that timeline when crypto could bottom? And I think it does. And I also think that if you look back to the 2008, 2009 period, you saw these banks misbehaving like a lot of these exchanges are, Celsius, Voyager, and now FTX. And you saw regulation come out of it. What was it? It was Dodd-Frank, right? So you have that functionality, which is now likely going to come out in the crypto markets. And so again, what I did was I looked at the charts and I said, okay, well, when Lehman Brothers occurred, how long did it take for the markets, the S&P to bottom? That was 5 to 6 months. And then I also looked and I said, okay, well, what type of fall did we see following? In the following 5 to 6 months, how much did the S&P fall? The answer is about 40 to 45%. So If you take 40 to 45% away from the current levels on Bitcoin, it puts you right around $9,000 as a potential low.
Well, that's not the 12,000 we spoke about recently. What is it because of FTX? Because there are people out there, Gareth, that are saying that's it. Bitcoin's dead. It was always a Ponzi scheme. Once a Ponzi scheme, always a Ponzi scheme. I told you so.
Yes. And in all fairness, I mean, I understand that perspective. I think that it's somewhat misguided because, again, number one, Ponzi schemes are a little bit different in their functionality, but I think also you look at the US dollar, and who's to say that that's not a Ponzi scheme? All we do as a country is borrow, borrow, borrow to repay debts that we have. And it's kind of just repaying, and we just borrow more to do that. So in many senses, you could say that the US dollar and the US economy is built that same way. But the key is that Bitcoin is now being adopted by more and more people. There's big money involved. I think FTX is a major issue because it really creates mistrust in the crypto industry. But again, from mistrust, regulation will come, which will create transparency. And once you have transparency, that's where real trust is built, right? I mean, before this, we didn't have transparency and we were just hoping that everything was fine. But we know now that's not the case. And so you have that transparency that comes from regulation. And that's what's going to drive big money to invest, in my opinion, in Bitcoin and in Ethereum.
We'll get onto Ethereum in a moment. But wasn't the whole reason for Bitcoin and Ethereum, and we've got all those altcoins, which we'll talk about in a minute, because that's a whole different game in itself. But wasn't the whole reason for Bitcoin / Ethereum to not have regulation around it, to be decentralized? I mean, wasn't that the whole premise around which people loved the Bitcoin community?
Yes, you're absolutely right. It was. I think what people are discovering, and what's interesting is, I've been saying for well over a year that we needed regulation in the space. And again, the key thing is you just need common sense regulation. Now, whether our politicians can actually come up with common sense, I would doubt that. But the hope is, and you have to look at it like this, right? Is it better to have no regulation and then people doing what Sam Bankman-Fried did and mismanaging, client funds and over leveraging and basically people losing fortunes or all their money? Or is it better to have some regulation in the space, maybe a little too much just because our politicians generally do that, but is it better than nothing? And for me, I'm an investor. I want to make money, right? So for me, the deregulation, or I should say the decentralization, isn't as keen of a point as whether or not Bitcoin goes up. Listen, if Bitcoin goes to zero, it doesn't really matter if it's decentralized or not, right? You have to have the foundations of trust, and you have to have rules and regulations to do that. So my hope is that the government doesn't overregulate. I think that for the most part, gold, or I should say Bitcoin, is the digital gold, and that will create its own kind of intrigue once we get transparency in the system.
Do you just said a moment ago, Bitcoin, if it goes to zero, could it go to zero? Is there a possibility that everybody will, because greed and fear, you've said before, greed and fear rule the markets. If the fear is strong enough, could everybody just switch out and say, all right, we're done? And could that then be a catalyst for gold?
Yeah, so number one, gold's already had an awesome move. I'm sure we'll talk about that in a minute. I mean, that's had a great move off the lows as the dollar has started to kind of trickle down a little bit. But I think when you look at Bitcoin, like weirdly enough, if you don't get regulation, I think you could argue that cryptos will eventually go to zero, right? Because think about this, after FTX, and you had a bunch of big money. I mean, Tom Brady, Gisele Bündchen, Kevin O'Leary. I mean, all of these big players were involved in FTX. And now everyone saw that blow up, and there's no sports stars, there's no celebrities, there's no big money that is willing to go near any crypto anymore until they have some sort of transparency, because it's not worth their fortunes. It's not worth their reputations now, right? You have some major tarnishing on reputations. I know there's lawsuits being filed and all that stuff. So the question is are there enough small investors to really create that push in Bitcoin, to have it go to 100,000, to have it go to $1 million? And again, I don't know that. And I think that's my biggest concern, is that without that transparency, without that regulation, you're not going to lure the big money in that can really drive it to the upside.
Why would governments give it regulation when they want to have their own central bank digital currency? Isn't a Bitcoin or an Ethereum just an annoyance to them? So they don't want regulation. They actually want people to just go, let it go to zero, because then we can get control with our CBDCs.
Yeah. So that's such an interesting thing, because in reality, it's probably smarter for the central banks to kind of clamp down and the politicians to kind of just get rid of it, because then you only have one option, the US dollar. I mean, you could say gold, other currencies, but this is the beauty of politicians. They all want to get votes, right? It's all about doing what's popular. And right now, the popular thing that's going to get them votes is to get regulation and transparency and make it so a lot of their constituents don't end up losing money in the future, right? They want to be seen acting like, oh, people got hurt. All right, how do we act and make ourselves look good? And that's the beauty of it. So in a weird way, if politicians were farsighted, meaning they looked really far out, they would probably get rid of Bitcoin and get rid of crypto. But they're also micro viewpoints, right? They all want to get reelected in 4 years here in the US. And that's one of the reasons why I think you get Bitcoin to stick around, you get crypto to stick around. And actually, it actually helps the crypto case here.
Are there enough people involved in Bitcoin for these politicians to actually do that?
I do think so. So number one, I think that there's a lot of politicians that secretly have crypto holdings. I know some have said they do, but I think it's more than we realize. Mainly because they're on the cutting edge of knowing what's going on. They see the revolution out there. They see what the blockchain is going to be. They understand some of these big money players getting in. And I also think that, you look at places like Texas in the US. Texas is a massive place where there's mining going on. There's huge amounts of jobs based on the blockchain. So Texas being a huge state, you have a lot of politicians just there alone that are pushing for good quality regulation, and they want the blockchain, they want crypto to survive. So you can go to other states as well, and it's really starting to spread. The crypto market, in terms of the economy, is exponentially growing year on year. It's still relatively small, but it is growing bigger and bigger. Like, look at things like Microsoft, other companies out there. They've already launched side businesses or incorporated crypto and blockchain into things that they're doing, which is now becoming more and more dependent on that blockchain.
So I guess what you're saying is it's not just physical Bitcoin on an exchange. Right. It's the ripple effect. It's the jobs. It's the mining. It's what's happening around the edges that's going to potentially make those politicians turn around and say, give it a lot of regulation, it's not going to go away. However, it could get a lot softer from here.
Yeah, I still think, again, if you look at it, Bitcoin and cryptos in general, there's so many companies in the crypto market that are under distress now, whether they had exposure to FTX or Solana, which has collapsed down from, $30 in the last couple of weeks to 12 or 13 or 14. There's a lot of hurt going on. And what's going to happen is they're going to be forced to liquidate positions to kind of cover debts. And we even see that with FTX. There's probably a lot of liquidations there alone when they're trying to pay back investors. So there's going to be this continual kind of selling pressure in crypto in the near term. You're going to get bounces, but for the most part, I think it trickles down. I think also the mere fact that you don't have the regulation now totally takes the big buyer away. Like, for me, I do have investments in Bitcoin, but they're relatively small to my overall portfolio. And the main reason is I don't want to have, I'm a trader, so I need to have it on an exchange, but I don't want to have a lot of my money on any exchange. So it's just like, okay, you know what? I will sit back, I will wait patiently and wait until the right opportunity where we get transparency comes in.
It's interesting. I was about to ask you, do you have anything on an exchange, or what do they say? They say not your keys, not your coins, or something like that. I can't remember the exact thing, but do you keep it in a cold wallet, or, is it dangerous to have it on an exchange right now with all of this chaos happening out there?
Yeah, so there's no doubt there's additional risk by having it on an exchange. I think for me, and again, by the way, this is, I have no inside scoop, but for all I know, the places I have my money could be gone tomorrow. But like something like a Coinbase, where it's a publicly traded stock, I would hope that the SEC is a little bit more involved there, so it's a little safer. I hear Kraken is audited twice a year, so there hopefully are exchanges that are better quality. But again, in this environment, nothing is 100%. We have to understand that. There's no FDIC insurance here in crypto like there is in stock accounts, where the government guarantees your money if it vanishes. And so people just have to be aware of that. And so cold storage is definitely one way to do it. Because I'm more of a swing trader, I don't do that, but I definitely limit the amount of money that's on the exchange.
All righty. Well, it's going to be interesting times. And you said before, Kevin O'Leary was involved with FTX. He's one smart guy. He's Mr. Shark Tank. Yeah. He got caught as well.
And he was, there's clips of him just praising Sam Bankman-Fried, right? So, it just shows you that no one's immune. And part of that is human nature, where there's greed that comes involved. But also, it's very hard to spot these things. Like, think about, and I bring this up, we talked about how Lehman Brothers is very, connected in a weird way to the FTX. But you could look at Enron. Enron operated for years doing basically fraud, and no one caught on until the market finally collapsed in that area, and then they couldn't hide it. You look at some of the other players, WorldCom or Bernie Madoff, right? And as long as the economy and the market was doing well, Bernie Madoff's Ponzi scheme could be paid off. He could just pay anyone who wanted to get out with new money. As soon as the market crashed or got real weak, he couldn't do that anymore. So I mean, this is the thing: is it's very in bull markets, shady players can hide things very easily, and even the best of us can get fooled. There's no doubt about it.
Well, you said as well just before that with the Lehman Brothers, it was about 5 to 6 months later that you literally saw the emperor has no clothes and the market dropped another, I think you said 40-45%. So right now, the markets have been okay. I'm very confused. I'm sure our beautiful community out there is confused as well. Sit in cash, be frightened, go in. What do you do?
So what I do is I don't try to pick the bottom, but I realize that I want to be in Bitcoin longer term. And so when we're down here, I've already basically accumulated what I would consider to be 1/6 of what I hope to hold in the longer term. And the reason I do that, even expecting that it could go down to 9,000, is that, if I'm wrong, I don't want to be sitting here with no Bitcoin, right? So I'm willing to buy a little bit here, then buy a little bit more here, then a little bit more here and here and here. And the idea is that by dollar cost averaging into my full position, I'm able to kind of mitigate the risk of missing the trade while also mitigating the risk of, if it goes to 9K, I don't want to be all in at 17,000, for instance, right? So it's a way of adjusting and handling risk. And I think it's a really smart investment decision for most people to do, is to just inch into positions, right? You don't know the future. We can all think we know the future, but we honestly don't. And so you kind of have to mitigate those risks.
Let's get into the US dollar and gold, because the US dollar, at last time we spoke, it was on a tear, very, very strong. Can you see some weakness in the US dollar? The gold price has kind of been hovering around. There's still people turning around saying, well, they're not that interested in gold. But actually, at the moment, that possibly should not be. You should be kind of paying a bit more attention.
Yeah, I mean, so gold, I've been loving the price action in gold. I'm going to bring up my chart so we can take a look here. But basically what we've seen in gold is you had this nice little bottom in gold where this V bottom, this double bottom right down here. Yeah. I love how in the bottom, you hit it here, you retested, and then it tried to break down again. It tried its hardest. And ultimately, it wasn't able to. And that's where you got this bullish move. We came up to this level here at around 1728, and it broke through. And then look at how it retraced. This is what I call the scene of the crime. So when you break resistance here, that becomes support. Resistance becomes support once it's confirmed above. And that means that when you hit this point, that should be support, and we have seen that hold up. So I love the fact that we're trading above this 1728 level. As long as that continues, I'm bullish in the near term and the long term on gold. And I think, honestly, wouldn't shock me to see the dollar having topped out in terms of on the DXY. It wouldn't shock me to see this being a longer term top on the US dollar. You have the Fed that likely will kind of taper down its hikes, meaning it'll do 50 basis points or 25, then go to 0, and then probably be on hold for a while, all while the US economy starts to really weaken more and more and more. And as the economy weakens in the US, the dollar will start to suffer, because it's going to start to price in the Fed having to lower rates down the line. And again, for that reason, that makes total sense why gold is outperforming here in the near term.
Do you think that gold could have another leg down before it strengthens back up again with the news of, a bit of US dollar weakness? But I'd love your take on a sort of a little further out with the gold.
Yeah, I mean, so for me, it's a matter of just looking at the Fed and saying, okay, everyone was worried about these 75 hikes coming and continuing, and now it looks more and more like that's not going to be the case. So that right there gives a reason why that gold price could have bottomed. And then when you're looking at the chart, I mean, you definitely see that there's some decent support along here. And again, the fact that it broke up so solidly is kind of intriguing to me. You could even be starting to form what we would call an inverse head and shoulder pattern here, which is a very bullish chart pattern. And I'll just draw it in real quick. Shoulder, head here, and then basically you create this shoulder down here, and then you break to the upside. So again, if that's the case, and I'll be watching for this pattern to form, gold could be, I mean, by December 31st, you could be back to in the mid 1800s, maybe even close to 1900, if not by early January.
That would be a nice little Christmas present, given that I'm known as the gold lady. How does that translate to the stock market? There's a lot of people that are watching and listening to you at the moment and saying there's confusion, Gareth. There's confusion. Are there specific areas? We all know that we're heading into this sort of new green technology revolution, if you like. So are tech stocks on the nose and resource stocks a place to go, or do you not like to pick certain sectors?
No, I definitely have no problem picking sectors. And what I would say is I still think Apple is way overvalued. I still think a lot of those tech stocks are way overvalued. And what's going to be so interesting is that right now we're used to the market trading inverse to the dollar, right? When the dollar was zooming up, every time it would go higher, the stock market would be under pressure. Now what you're going to see is you're seeing this little interim part where the markets are enjoying this pullback in the US dollar, but there will be a tipping point where the US dollar starts to go lower and lower and lower, and it's going to start to freak out the markets. And the reason why it's going to be bad for stocks is that the dollar going lower is going to signal a start of a bad recession, and it's going to be a recession that looks to get worse and worse and worse. And in those periods, the dollar will go lower. And that will actually hurt stocks in that situation. And it'll hurt stocks because if you have a bad recession, well, guess what? Apple's selling less iPhones, right? Microsoft's selling less this and that. So they're going to make less money, and their multiples will have to come down overall. So just be prepared for this little flip going on where right now a weaker dollar is nice for the stock market because the Fed's involved. Once the Fed gets to neutral and then we still see the economy cratering, then the dollar will start to fall even with, the stock market.
Gareth, you wouldn't even know that the market was in any sort of trouble down here at the moment. We've got this thing called Black Friday sale, and I just heard that Australians are going to spend over $6 billion on bits of plastic and things that actually they really don't need. They're not investing. They just spend. You know, down here, it's like they're off to the races and just having a party. And I think what you're saying is be a little bit cautious right now.
Yeah, the party is coming to an end. There's no doubt about it. I think that, again, during COVID, and you guys probably experienced it down in Australia as well, people had a lot of savings because they couldn't go do stuff. So it's almost like a kid in a candy store right now where you get out there, you're like, oh, I'm free finally. I can go buy stuff and travel and this. But then you're like, wait a minute. Now I finally ran my credit card debt to its maximum and I'm out of money. Now, what do I do? And that's where you start to see, oh my goodness, now we start to see job losses. And look for this. We're getting a jobs number in early December coming up next week. Look for the US jobs number to start to get worse. And I think that's what you're going to see. You're going to see this pivot point where you're starting to see people lose jobs versus gain. And that's going to be the trigger for people, the consumer, to really pull back on their spending.
Is that going to have any impact? I mean, we talked about the price of Bitcoin. I know we're going back to that. And I want to go to Ethereum as well, which is a slightly different animal, if you like. Where was I going with this? But basically, do you think that people really understand that we're going to be hitting a real road bump here?
No, I don't think so. I really don't think that anyone in this new economy has that sense, because basically, if you look at the last 20 years, or at least since 2009, every little hiccup that we've seen, the Fed has come to the rescue, right?
Yeah.
So we're kind of like a child that is wearing a helmet and a body armor, and like we can fall down a hill, we can fall off a cliff, and we're fine. We're just like, oh, no big deal. Well, guess what? That security measure, that safety measure is being taken off because the Fed clearly cannot print like they were in the previous cycles now that we have inflation rising, right? So the average investor is just thinking like, okay, we're in a bear market, but by January or February of 2023, we'll be making new all-time highs, so no big deal. That's what they've experienced, right? That's the experience for the last 13 years, at least, if not the last 20. So you have this scenario where people don't think it's real. They don't think the Fed is really taking off the bumpers here. And it's going to be a shock when the Fed, every investor and even big money is going to say, okay, Fed, we're in a recession, please start your printing again. And they're going to say, we can't. Inflation's 4 or 5% still. We can't print. And that's going to be the reckoning day where people freak out.
So it's the inflation numbers which will force the Fed not to be able to print. That's when everything starts to get a little bit ugly.
Yes, as soon as the market or investors in general realize that the Fed will not come to the rescue as soon as we tick into a recession, that is going to be a wake-up call for investors. There's no doubt about it.
So 2023 could be a very challenging year. Do you suggest, and I'll come on to Ethereum in a minute, do you suggest that they head towards gold, diversify, come to in the money stocks and do your verified stock trading? I mean, in all honesty, you do call it pretty well. I just want to ask you, because people can go and subscribe to your service, can't they? Because when there's a lot of confusion, and this is not advice, ladies and gentlemen, it's just there's an option there that Gareth actually watches these markets. And could you almost, I don't want to put words in your mouth, but are you able to almost watch on their behalf, if you like, or how does it work?
Yeah, I mean, I do my best. I absolutely do my best. I am cued in, 24/7 almost, except for a few hours of sleep a night. And the idea there is that, a lot of times what you'll find is when people are most panicked, that's when we're going to get the bounce. But you have to recognize that in bear markets, it's just a bounce, right? So I go long, I go short. I go long, I go short. When I go long, we make money on the move up, but then we're taking it off the table very, very quickly as well. So it's about kind of understanding the macro picture and then understanding human psychology. All of that is all combined into what markets and what stocks do. And by, it essentially helps us guide people through. There's no doubt about it. And I think the key is here, there are investments that you can look towards. Like, for instance, gold. You guys know I've loved gold all year long. I said it would be the best performing asset between the S&P and Bitcoin. It obviously was for 2022. I think it will be as well for 2023, although it's a little trickier with Bitcoin now, because as Bitcoin gets to a low, it's a little harder to think about, all right, if it bottoms out in June or May of 2023, where is it by December? So it's a little trickier, but I still would go with the safety of gold with the uncertainty in crypto right now. But I also think that there are other places to look. Like, China is actually lowering rates. They just lowered interest rates. It's very risky there, no doubt about it. But I think that that's an opportunity. Brazil looks interesting to me. Their chart is unbelievably coiled. It hasn't made a new all-time high for the Brazilian stock market in something like 13 or 14 years. So it's kind of what I expect for the US stock markets has happened in Brazil for the last 13 years, and it could be getting ready to break out.
Interesting. Last comment on Ethereum. It's not Bitcoin. It's a slightly different animal, if you like. It is more contracts based on the blockchain. Is that as affected by, I guess, fear and greed in the markets, or is that more stable?
No, it is definitely affected. I mean, you could argue that Ethereum's a little bit more volatile than Bitcoin even, right? That moves up and down. It moves up more than Bitcoin percentage-wise, but also can drop. But I think the key is here is, like, I want to know if Ethereum's a security, what does that mean? And I don't think we know that yet. So I think the key is the chart itself does not look horrendous. One of the positives about the Ethereum chart is that the June low has not been taken out yet versus what we've seen in Bitcoin. Bitcoin has taken out the June low. So I think that's a small positive. I think that Ethereum will thrive once there's some more transparency, but it's still one of those scenarios where if Bitcoin's going to 9,000, I've got to imagine that Ethereum probably breaks lower and maybe tests this $650 level at some point before the bottom is in. But again, longer term, I love Bitcoin. I love Ethereum. You just got to ride the rocky rail here in the near term.
Well, as always, Gareth, it is fantastic to talk to you. And I know our community out there loves your commentary because it allows them, I guess, a little bit of clear air in a world of total confusion, if you like. Final comments I want to throw over to you. First of all, if they want to get involved and say, you know what, Gareth, you can understand a lot better than me, how do they do that? Do they subscribe? Are there different areas they can do it? And then I want
Yeah,
you to
so
sorry, and
no,
then
and I appreciate that. I do appreciate that. And I think the easiest free way is to just follow me on Twitter at Gareth Soloway. And then again, I post little charts, I post little videos that I do and kind of little updates here and there. And then if you're serious about trading and investing, then In the Money Stocks is where you'll find my service, Verified Investing Alerts. And if you're more just into crypto, I have verifiedinvestingcrypto.com as well, where I do a daily video. I give, trade signals and kind of, it's a way to kind of understand the inner workings of the markets while also making money both long and short in the market.
Well, there you go. Final comment, Gareth, to you. These markets, what you're saying is that 2023, if I've got it right, could be even more of a roller coaster. So sit back, buckle up. Final comment to you.
Yeah. I think sit back and buckle up. I think 2023 will be as volatile, if not more than 2022. I think that gold likely starts to perform much, much better as we start seeing the economy kind of move towards a recession. My guess is Bitcoin bottoms in 5 to 6 months, down about that 9,000 realm. And ultimately, we will see that regulation. I think you'll see a framework of regulation within 3 months. And let's all keep our fingers crossed that it's good regulation.
All right, there you have it, ladies and gentlemen. Brazil, China, regulation, but more importantly for me, he likes that gold again. Gareth Soloway from InTheMoneyStocks.com. Thanks so much for joining me today on Small Caps.
Thank you.